you need to work out what the company car tax is, then work out are you better off claiming 45 pence a mile, then work out if you had a sole trader partnership on an LLP, would that work out better? Above and beyond that, you would then work out the depreciation on a car. Now moving on to a sole trader partnership on LLP. So if you have a car through that arrangement, there is no company per se because you are part of the business, then there's no company car tax to pay. That's when you need to work out how much of the car you're using for personal purposes. So let's say you drive 10,000 miles per annum in the car, and 20%, so 2,000 miles are used for personal purposes. You would then withhold, restrict, or in the world of accountancy and tax we call it add back. You'd claim 80% of the cost for business purposes, 20% of the cost you wouldn't claim, and that's when Yogesh, you would only claim some of the capital allowances and not all of the capital allowances because you've got 20% personal use. Carrie has added to my knowledge, confirming that an i3 is a fully electric car, so that's going to work absolutely fine, Carrie. So you need to work out what the company car tax is, then work out are you better off claiming 45 pence a mile, then work out if you had a sole trader partnership on an LLP, would that work out better? Above and beyond that, you would then work out the depreciation on a car and then compare buying a car, let's say on a hire purchase or paying cash for it. Paying cash for it, I think is a bad idea, versus having a car on contract hire. And you can get some cracking deals. So I've just got a new 7 Series, and I'm paying £500 plus VAT for it. I get, I think it's 10 or 12,000 miles every year, and I've got it for 2 years. So it's a 3 plus 23 deal, which I think is really good. If you have a car which is on a lease and the CO2 emissions are more than 110 grams per kilometer, then you have to add back 15% of the cost. So just bear that in mind. So the lower the CO2 emissions, the better. So, and if the company pays for the fuel, then you've got to pay tax on that, which is pretty heavy going, and the numbers are available on HMRC's website. It's something like 22,000 pounds fixed charge, and then chargeable at your tax rate. Now, if you have a company van which you use for business purposes, but you take it home in the evenings and you restrict personal use, no company car tax to pay. And if you had private use anyhow, the tax is nowhere near as high as cars, and then the fuel benefit on personal use isn't that high either. But usually people who have vans tend to use it for business purposes. They may take it home because the next day they're using the car for business purposes. There's very low personal use. If there's very low personal use, HMRC are usually okay with that.